Now, despite uncertainty and retakes of the national budget, the South African Revenue Service had been granted much-needed funding. Minister of Finance, Enoch Godongwana, allocated 3.5 billion rand for the 2025-26 financial year and an additional 4 billion rand over the medium term. An investment aimed at improving compliance and supporting several key SARS initiatives. Now, post-Budget 3.0, Sars Commissioner Kieswetter joins us to unpack the service's plans to close the widening tax gap in a constrained fiscal space.
I think firstly, let's just talk about the process that led to this third version of the budget. In itself was a tremendous learning opportunity.
Yeah.
And in fact, I have to say, leaves us with a more resilient democracy and a more activist taxpayer, which is what you need for a healthy democracy. And so that was necessary. It also produced a product that fortuitously is now informed by a lower than originally expected GDP growth. And all of its other attendant assumptions. And so we have a more realistic view of how much revenue under current circumstances this economy will produce. It has allowed the minister to take a few important decisions. The first is to give certainty that there will be no VAT increase. It is now cast in the budget. And that takes off a tremendous amount of pressure on consumers already cash-strapped. The minister is also clear that to help balance the expenditure with a lower or more moderate income from a lower than expected economy, he will not reduce baseline expenditure, but he will manage the provisional expenditures within the means that the fiscus provides. So from a revenue perspective, the 1986 billion does not include the additional revenue that is ring-fenced as part of the billion rand project that we have launched for this year. What the minister has said is, I will give SARS some more time to prove its business case, and I can make a decision in October. Now, for us, this is not the first year that we are rolling out a debt recovery program. In fact, we did so last year and have demonstrated that we can yield a return on every rand the minister gives us of between 30 and 60 times. Now, if you talk to an investor, 30 times your money back is not a shabby investment. And so that's what we delivered last year. And so this year we said to the minister, we believe that we can very conservatively add at least another 20 billion and at the upper end up to 50 billion. The minister has said, okay, I'll take some time. By October, I will have more confidence. And I think that in my back pocket, I will accommodate or I will account for about 35 billion of additional revenue. And I will then be able to review the in-year, but also the outer years in terms of revenue forecasts.
Yeah. Now, I mean, Edward, you mentioned the lower forecasts in terms of economic growth. And of course, we know that a sustainable tax revenue really comes from a solid tax base that is derived from better economic growth. Now, I'm wondering then, what is the runway of revenue collection in this current economic environment, and also with the lower revised economic growth?
So there's two components to it. The first is that we need to ensure that the revenue that is due from the existing tax base is collected. And that's the so-called billion rand project that we believe will yield between 20 and 50 in each of the 3 years, by the way. So that goes a long way to plugging the fiscal gap that the minister is currently faced with. The second is our current compliance level is around about 65% of voluntary compliance by taxpayers, which means we have headroom. If we improve the levels of compliance, and this is what we call closing the tax gap.
Yeah.
Some of the tax gap issues are in the criminal and illicit economy. It is aggressive tax planning by corporates and by wealthy individuals. It is just general areas of non-compliance across all of the areas. And then there's a significant abuse of the refund system, which seeks to have impermissible fraudulent access to the refund system. So in terms of modernizing our entire platform to address these issues, will expand the tax base and therefore over time reduce the burden on individual taxpayers, but expand the actual pool of tax that is collected. Yeah. And so that's really the aim in the medium term. In the short term, it is to recover outstanding debt. In the medium term, is to grow the tax base to be more reflective of what it should be. And then in addition to that, if our economy grows, we have businesses growing, we have more businesses, fewer retrenchments, more positive creation of jobs, and that begins to have a sustainable impact on future revenues.
Yeah. And I understand, of course, with making up for the non-increase of VAT, the finance minister is implementing additional spending cuts, but also the tax adjustment that he made was in the fuel levy. How far can that go in making up what VAT could have done, Edward?
So first of all, there are no spending cuts. The baseline stays. The minister will be limited in how much additional revenue he can allocate. So it's not, the narrative is not how much has he cut, but how much can he spend in addition to the current baseline. The fuel levy, we must remember, has not increased for the last 3 years. So, and that's not really sustainable. And so the minister has said, I will adjust it by inflation based on a constant consumption level should give me an additional revenue amount, and that to some extent will make up for the revenue I will have lost through the VAT reversal.
Well, thank you so much for your time, Commissioner. We really, really appreciate your insights, just laying out the details on the tax implications of the budget. That was Sars Commissioner Edward Kieswetter.